let's say XYZ is priced at $1, and the capital needed to purchase 10,000 shares, if you do your math calculation over here, is $10,000. Right? If the price of XYZ goes up to 110, you actually make $1,000, which is not bad, 10%. And your total return on capital is actually 10%, which is good. Okay? Nothing wrong. But I'm going to share one with you that is called CFD. That one is to leverage your money so that it works much harder for you. Okay? Because everyone is almost investing. Every friend or every relative that you talk to, most of them are into some kind of investing. Okay? So what I feel is, if your money can work much harder than the rest of the crowd, then you can stand out and get out earlier out of the rat race earlier than your friends. Okay? So CFD is let's say the same example again. XYZ price at $1. If you use CFD, by the way, CFD stands for contract for difference. Okay, CFD stands for contract for difference, and because the use of CFD, you only need to have 10% of the capital needed, and so in this case, you only have to fork out $1,000. With $1,000, you can purchase 10,000 shares, coming out with only 10%. But of course, who will fund the balance 90%? You may ask. The brokerage will fund for you 90% for the purchase. And because of that, they will require a financing charge. And that's why using CFD, they will charge you a small interest for the balance 90%. And how much is that? It's roughly 2 to 3% per annum. So 2 to 3% per annum is still quite acceptable. Okay, especially if you are going to trade and not so much of investing, but more to trading short term. And let's say the same scenario, XYZ goes up 110, potentially you will have made 1,000 as well. And because your capital is your total is okay.
Hi Thomas, we lost you for the past like 5 to 10 seconds like that, probably due to some issue. But can you like repeat when you say that now is you're using 1,000 as a capital? So how does it make the difference of the return?
Okay. 10%. Using 10% as your capital. 10% of capital is 1,000, right? So
Yeah.
the brokerage will fund $9,000. Okay, fund the balance 90%, and because they fund the balance 90%, you have to pay an interest, and the interest is roughly 2 to 3% per annum. Okay, just 2 to 3% per annum, not a lot. And let's say that we go through the same scenario again. You make 1,000 from the trade. Because your capital outlay is 1,000 only, you actually make a 100% return. Okay, the difference between these two is CFD is more for short term because every day they charge you interest. Okay, based on a formula that roughly is 2 to 3% per annum. Okay, but they charge you every day. Okay, even if Saturday, Sunday, they will charge you. So CFD is more for short-term trading. Right? Another good advantage of using CFD is that the commission charge. Example, let's give an example of $50,000 worth of shares. If you are going to buy a $50,000 worth of shares, the commission for cash investing will be maybe between $200 to $400. But if you use CFD, the commission is easily $20. Okay, almost 10 times cheaper. Right? Why? Because CFD they want to finance you and make money from the interest charge, so they reduce their commission a lot. Okay, so how do we use CFD to our advantage? And that the only way to do it is to trade short term. Okay, meaning I have did my calculation. If you want to do CFD, don't do more than 3 months. That means don't buy and hold more than 3 months. okay, then the interest charge with the commission savings is still worthwhile to do CFD. Right? People ask me, hey Thomas, but this share that I want to buy is going to, I want to hold 1-2 years. Then if you're going to hold 1-2 years, still use the first example. The first example, which is cash investing, which is still very good. Okay? But you are into a short-term view of a certain stock. You think that it's going to move in 1 or 2 months. Then no point pay the extra commission, because you can actually use CFD to your advantage. Okay? And also use less cash to buy the stock, so that you have another, let's say you have 10,000, you can pay the 10,000, but what if you can use 1,000 to just use the CFD to buy, and the balance 9,000 you can use it for something else, even better, right? This is just CFD and cash investing example. Let me share a bit basics about Forex as well. So for Forex, one standard lot is actually 100,000 units and typically around $100,000. And because Forex now,
At my website, you'll find online financial seminars, which is I call webinars. I do it regularly, and also a lot of online investment and financial courses, which is conducted solely online. So I'll be waiting for you at my website at kclau.com. I wish you have a great day. Hope to see you soon. Bye bye.